Let us see the next question. King company has following shareholders equity account. Share capital 25 lakhs. Face value is rupees 10. Reserves and surplus is 100 lakhs. Shareholders equity is 125 lakhs. Current market price of equity share is 75 rupees per share. What will be? There are three questions. Number of shares outstanding, change in the reserves and surplus, trend in share price after the corporate action in the following situations. Consider each of the situation independently. The first situation, if there is a bonus issue in the ratio of 1:5, 2-for-1 stock split, 1-for-2 reverse stock split. That is a question. In the first situation, what will be answer for all the three questions? I want you to post that in the chat box. Let us have understanding that say how to make the calculation of answer. First of all, let us have a discussion. 25 lakhs, 10 rupees. So of course we understand that say we are going to prepare the working note. For the timing I am explaining to you. 2,50,000 is the number of shares and 10 rupees is the face value. Fine. The question says that say if at all we go for the bonus, 1 for every 5 shares. Then in that case, what will be the number of shares outstanding? We understand it will be 2,50,000 plus 50,000. That is 2,50,000 divided by 5. So it comes to 50,000. So 50,000 shares will be issued. So it will be total 3 lakh number of shares. The second is the change in the reserve. What will be the change in the reserve? Let us see. We understand that so the reserves and surplus account debited to like the bonus to equity shareholders account and bonus to equity shareholders account to equity share capital account. So 50,000 into 10. So 5 lakh rupees is the reduction in the reserve. Change is the question. So reduction in the reserve is 5 lakhs. This is 3 lakhs. In the third case, the question says that so what will be the trend in the share price? We understand that so the number of shares increases. Overall value of the firm is remaining same. So price of the share is going to fall down. That is the way so we will be having so the change, that is the trend in the share price. The overall wealth of the shareholder is remaining same. That is the market capitalization. But the number of shares increases. So with that what will happen? The price per share is going to fall down. That is what we understand in the last case. Answer. This is what we understand. So please write down answer. Working note number 1. Calculation of existing number of shares. In that case, it is equity share capital divided by face value of share. Amount of equity share capital is 25 lakhs. Face value of equity share is 10 rupees. So it is 2,50,000 shares. Now the first question is number of shares outstanding. Number of shares outstanding. It is 2,50,000 plus 2,50,000 into 1 by 5. So it is 50,000 additional shares to be issued. So the total number of shares 3 lakhs. Second question is change in the reserve. It is 2,50,000 into 1 upon 5. So it is 50,000 shares and the face value is 10. So there is a reduction in the reserve by an amount of rupees 5 lakhs. And trend in share price. We understand it's the same wealth, but the number of shares have increased. So price per share will fall down. So trend in market price, it will decrease. That is what we understand. The next is a stock split. I want you to tell me answer in the chat box that what will be the answer in the stock split for all the three. Just giving an explanation for the market price of the share. We understand basically what will happen. Right now there are 2,50,000 shares having price of rupees 75. So this is considered to be the current market capitalization. So it comes to 2,50,000 into 75. That is 187.5 lakhs. Always remember that so the value of a firm will increase with the doing proper business. That is, you make investment in a proposal which has positive NPV. You make investment in a proposal which has a return more than the cost of capital. Then the value of the firm will increase. Over here, the overall value of the firm will remain same. However, the number of participants have increased. So the cake size is remaining same and the number of participants increase to 3 lakhs. So the price per share will reduce to 62.5. That is the way we'll have the answer that the price per share is reducing because the number of shares increases. See, stock means security. Okay, stock means security. So preference stock, debenture stock, common stock, that is equity shares. Stock split means what the company will do in this case. The company will take like equity share having face value of rupees 10 from the investor, and against that 2 equity shares are given, say of rupees 5. That is what we understand is the 2:1 stock split. So what will happen, that's over here the number of shares increases. It will increase from 2,50,000 to 5 lakhs. Number of shares increases to 5 lakh. So what will happen, the old equity share capital account is debited of rupees 10 and new equity share capital of rupees 5 is credited. So as far as the reserves and surplus is concerned, in that there is no change. Trend in the market price same. The number of shares increases and so the total value is going to remain same. So the price per share is going to fall down. This is what we understand. Now basically we understand something like this. That number of times what happens at, let us say that there is a company called ABC and there is a company called XYZ. Face value of the equity share is 10 rupees of ABC and 1 rupee of XYZ. Market price of the equity share for ABC is, let us say, 50 rupees, and for XYZ, so the market price of the share is, let us say that this is 50 rupees and this market price of the share is, let us say, 400 rupees. Suppose it is like this. Now suppose there is an investor who wants to make investment of rupees 200. Now with that, so the 200 rupees, can he purchase the equity share of that is ABC? The answer is no. In India right now, so you cannot buy the fraction number of shares. Like in other countries, you can buy say the fraction number of shares. Like in United States of America, you can buy even the fraction number of shares. But in India, it is not possible right now. Can he purchase the equity share of XYZ? Yes, he can purchase. Why? Because the price of equity share is 50, which is lower than 200, so he can purchase 4 equity shares. Now, technically, we understand that so the price of XYZ is greater than ABC. Price of XYZ is more than ABC. Why? Because we understand that say the one equity share is having value of 50. I'm sorry, for face value of rupee 1, the price is 50. And over there for the face value of 10, the price is 400. So even though ABC Limited is having say the lower price comparatively, yet investors are not able to invest in that security. That is the reason say ABC company may want to go for the stock split, so they can attract even the investors say who want to make investment at a lower value, who want to make investment say for a small amount. So when ABC will go for 10 is to 1 stock split, 10 is to 1 stock split, then what will happen? The price per share will fall from 400 to 40. And even in that is in this case, an investor can make investment of 200 rupees. This is what's the kind of logic that we have for the stock split. It is basically with an intention to reduce price per share. Why do you want to reduce the price per share? So that say more and more number of investors, more and more number of shareholders say can buy the equity share of the company, and of course it will improve the liquidity of the company, because liquidity is also one of the important criteria in secondary market valuation. Please add on a note. First point, bonus shares is considered to be stock dividend, full stop. In that, company is capitalizing its profit and even shareholders are satisfied that they get return. With paragraph write down, if an investor wants liquidity, comma, he or she can sell investment in secondary market. Full stop. Issue of bonus shares will reduce market price of equity share because number of shares increase and total market value remains same. Second, Stock split means new equity share having lower face value is issued to investor slash existing equity shareholder. Full stop. Due to stock split, number of shares increase in the market and price per share will fall down. Full stop. In that write down further, many a times to reduce price per share, comma, to increase liquidity, the company is going for stock split. Full stop. Third question, a 1 for 2 reverse stock split. Please give answer for this in the chat box. Now friends, over here, what will happen? Reverse stock split means two equity shares, because one for every two shares. Two equity shares will be taken from the existing investor and one equity share will be issued to them. That is what we understand is the reverse stock split. So it is 2,50,000 into 1 divided by 2. So it is 1,25,000 shares. Change in reserve in that dash, because again the old equity share capital account will be debited and new will be credited. Old one will be of 10 and the new one will be of 20. Trend in market prices, that's the price is going to increase. Obviously, the reason for that is that the number of shares have increased, that is have gone down, so the price per share increases. This is what we do number of times, because maybe in case of the mergers and acquisitions we have to do it like this in order to have the parity of the share price, that is the face value. At the same time, it may happen that we are going for this kind of the reverse stock split, so that the price per share can be increased and the security becomes tradable in the market. Number of times you might have heard that the price of the security is falling down substantially and it goes in the pases, it's even less than a rupee. So in that case, going like this, will increase the price per share. That is what we understand. Okay. So write down third answer. A note only for understanding. So the third point in that write down, reverse stock split means issuing less number of equity shares comma, in comparison to existing number of equity shares, full stop. As number of shares reduce, comma, price per share increase, full stop. Further, it may be entered upon so as to increase price per share and shares become tradable, full stop.